Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Happy 1st of December, everybody. I want to start the video off a little bit differently from the way that we usually do, and I really just want to start the video off by saying thank you. Thank you to everybody that's been following this channel, that's been supporting it, that's been leaving likes, comments, and is subscribed. It means the absolute world to me, and you guys are the reason why we keep putting out content on the daily. It is absolutely my mission to make sure I can educate and try and help as many people as possible through what is now a troubling time or a challenging time in the markets, but also lead people to the promised land of a new bull market and hopefully really capitalize on that. I was speaking to a number of people this morning and they were asking me, how I make my living, this and that. And essentially, I right now I'm a full-time trader, but it's having that foresight that led into the bull run that we've just gone through that really changed my life and gave me a level of financial freedom that I could have only dreamed of when I was younger. And I believe I can help people achieve that themselves. So a massive, massive thank you to each and every one of you that follow this channel, subscribe, like and comment on my videos. It is massively appreciated, and that's really how I wanted to kick things off. Let's dive into your daily cryptocurrency market update, and it's going to be a really good one, guys, because yesterday we had Jerome Powell coming out and speaking. It's always quite a challenging week trading around these events because the market is very volatile. What you guys that watch the markets daily will notice is the market is very emotional. It's very exaggerated in both directions, and it chops and changes very quickly. And as a trader, you have to kind of navigate those kind of waters. So that's what we're going to be doing. We're going to be looking at some short-term TA because we very, very accurately and actually traded this and made money off this rally that we had from sort of the 15K range when we said you were going to get a short squeeze. And then even though we are still a bear, I still think we're in a bear market and we are going to see continuation within this bear market. We have said that we actually do see a short-term rally, short-term being 3-4, weeks long, going into Christmas. And that is very much playing out. So we're going to do some TA on that, maybe predict what we think is going to happen moving forwards. And then we're going to talk about what Jerome Powell says. I'm going to bring up a tweet here from Jim Bianco, somebody that I actually listen to a lot. I think he has a very good macro take on things. He talks about the unemployment rate. He talks about the fact and what he kind of envisions moving forwards for markets. We're going to bring up the unemployment rate again because we've done a whole study on this. This in the red is the S&P. In the black is the unemployment rate. And there's a correlation between unemployment being at a high and stock market being at a low, and unemployment being at a low, which is where it currently is, and stock market being at a high. So we've said that if markets were to go on and rally and start a new bull market, this would need to drop down and we need to see unemployment fall. Well, we've suggested that in the environment that we're in, that's not going to be the case. And actually the stock market has a lot further to fall. The economy generally is very different from what it was sub March 2020 or prior to March 2020. And then I also want to talk about a pivot and a cutting of rates. And actually, people are waiting for this pivot. It's my opinion, guys, and this is why I absolutely applaud you for following this channel. Because you guys can see sense, you can see real sound reasoning and critical thinking, whereas 99% of YouTube channels and Twitter accounts out there have absolutely no idea what they're talking about and have only really caught their break through being influencers, if you will, and not actual traders and investors. And going back to my point at the start of the video, I do this for a living, okay? You can work out what sort of revenue you generate from having a channel like mine. It's not enough to live off. So I have to be an investor. Investing has changed my life. I believe it can do the same for you. And in terms of continuing to make an income, I have to be right and have a good reasoning and be able to critically think about markets and make money off of them. So that note aside, I really want to talk, and I'm going to do a big video for my patrons on this when we're really going to look into it. Anybody that wants to take their trading and investment and sort of crypto journey to the next level, please check out my Patreon, guys. It is £30 a month or $30 a month. Now that may seem like a lot to some people. If you simply can't afford it, that's absolutely fine. You get great free content on YouTube, but it's really a community that I'm very proud of at this point. I'm proud of each and every individual in it. Because certainly, from all aspects, these people are really doing what many others are saying they're doing. And actually, I'd say that we've got some better traders and investors and sort of critical thinkers around markets than most of the garbage you find on various platforms. So talking about a pivot, actually what you'll find is when the Fed have always reduced interest rates, the market has actually capitulated from the Fed pivot. So everyone's going to pivot, bullish, bullish, bullish. Well, this contradicts all of that. So we're looking for a pivot. We've really emphasized this kind of concept of liquidity. But what people really miss is, why do the Fed pivot? When the Fed pivot, typically it's because something bad's happened, okay? And that's what causes them to pivot. And this is what we're watching out for, and has been our thesis all along. Now, we think a pivot, actually, a reduction of interest rates, which is a pivot, people calling for a pivot as slowing down, as stopping, that's not a pivot. You're making that up. A pivot is when they reduce interest rates. Historically, whenever they've reduced interest rates, it's been to the demise of the stock market. This is the S&P we're looking at. Okay, we also have unemployment coming down, which is what that I think is going to go up, which is what is going to cause them to do a pivot, which Jim Bianco covers in this tweet very, very accurately. But let's just start things off. We'll get into all this. It's going to be a bit of a longer video. I want to really kick things off with a bang, as it's the first of the month. But I really want to start with a little bit of TA. So you guys know we think this is very much an intact bear trend. We said, look, you've got a bullish divergence here that I need to take seriously as a market technician. I need to take that seriously. I can't ignore signs like that. Ignoring this big bearish divergence, I would have made a lot more money taking this seriously and just, being happy to wait on the sidelines and see what happens than having to sort of admit I was wrong at 44k and then get out and endure this downside. So this has made me think we're going to get a rally, and we've actually likened the last bearish bullish divergence that you had for Bitcoin, which was over here. This is sort of big time frame, weekly time frames, with what took place over here leading into the March 2020 crash. I've actually called for a similar thing. So this was the FTX spill. The FTX spill, in my opinion, should have been far greater than it was, given the dominoes that fell or are still yet to fall as a result of it. So why did we only sell off to that magnitude? Well, I'm going to argue that actually there was a relative strength here. There's a lot of vested interest, and we're probably going to need to go up before we go down. Markets just don't go down in straight lines. In bear markets, you have some of the harshest rallies, which is why traders get caught with their pants down, and investors. And we've seen that. Pretty much most YouTubers, and bearing in mind, guys, we were one of the only people bullish at around about 15k and saying you were going to get a short squeeze, and we showed you the reasons why we thought that. Most other people have been bullish at every single local bottom that we've had, and we've said, look, this was the one where we were going, oh, okay. We ran up to 44k, we said, right, we're out. We're going to start exiting our positions. We exited some altcoins later than others, and then subsequently, since then we are 61% down today. So we're not bullish often, which is why I think people need to kind of pay attention when I say that I've got a bullish sort of narrative here. So let's drop down to the time frame. Let's do the daily. And you can see that this was the range. This was a 150-day range before we had this FTX contagion, right? You don't consolidate for 150 days to break out at one point by 24%, 23%. In my opinion, a lot more of a move should have come from this. So the fact that you held strength here, to me, it's still very much just a pause before we get that continuation to the downside, okay? But how do we get to that downside? So right now we've said, and we've compared the analogy of longing the market with playing Russian roulette. The gun's loaded. You're just hoping that when it's your turn to pull the trigger, you're not the unlucky one. So we've been getting longs here. Down here, and bearing in mind, let's drop down to the time frames, and we're going to draw a trend line. We'll leave these two sort of areas up. You don't get TA like this elsewhere, guys. Most other people are fixated on things like, I don't really want to be too harsh here, but like waves and stuff like that, which do have a degree of accuracy, but there's some great books out there on Elliott Wave theory. It does work, but I think actual price action TA is king. I think it trumps them all. If you can look at the price and you can look at the price action, it will tell you a lot of what you need to know. And then you add indicators and you add formulas and Fibonacci's and Elliott waves in to sort of construct your bias. You don't know. You don't. Nobody has any idea 100% what way the market's going to go. We're just trying to come up with our best probability based assessment. So we were short here on this volatility squeeze. We shorted it with my Patreons, and you know the last sort of week was not an amazing week for us, but we made money, which I can say most people aren't doing in this sort of a market. So you had this grind line, just like you had a grind line. We're gonna have to get off the weekly. Sorry, the 4 hour, the hourly. You also had a grind line here. Grind lines are very, very important, guys. One of the most useful, you know, sort of TA that you can get. You know, when you're grinding along something and you break, you usually get this real squeeze. You usually get a pop to the upside, which we called for here, by the way, guys, on the FTX spill. Even though we didn't have any idea FTX was going to implode, I totally missed that. And then you get, you know, you can see you get this sort of rally, and then you get this continuation to the downside. Lots of alpha here today, guys. So we had this spill, this constriction of volatility. If you put on your Bollinger Bands, you'll see it. And then you break to the downside. We come up, we've retested this trend line. You're consolidating. You're holding this level here. So we spilt down here. We closed all our shorts because of this area over here. We said, look, it's got a bid once, probably going to get a bid again. You don't short support, and it's a good area for us to take profits. We then saw a record inflow of shorts. We saw every single Twitter account and YouTuber come out and say how bearish they were, and oh no, this is the end. That is, for me, ripe for the picking for taking along. We actually put in small long. We didn't make a lot of money off this at all. But then, of course, the short squeeze ensued. You came up here. You came back to this level here, and we've been covering this daily. All my videos are up. And we said, okay, from a risk to reward perspective, people may try and short this, but you're holding support and very, very valid support. So this is so technical, okay? You broke it here, and then what did you do again? You had BlockFi come out and go bankrupt. You had the Fed's Bullard come out and essentially say, we're going to crush markets, and I still think they're going to do that. And I think one thing that he said that really rings in my ears that Jerome Powell was a little bit soft on saying, but still sort of said in a roundabout way, was that markets are underpricing what we're going to do. And I think they are. I don't want to get into the whole liquidity aspect that we've continuously reiterated what liquidity is. For me, as an investor, it's all about liquidity. That is the name of the game. If you can understand and conceptualize and really get your heads around liquidity and how it works and money, you're going to do very well as an investor. Because what it does, it gives you the backdrop to make those investments, knowing that you may have a relative, knowing that the environment may support you. Great book from Stan Weinstein called How to Make Money in a Bull and Bear Market. Sounds very trivial, but he did it's an old school book, but he did a very good book on, you know, how to pick stocks and how to show relative strength and weakness with them. But anyway, so we had this spill, and then we said, okay, we were looking to take maybe spot longs here, but we didn't because we were really hoping that this level held. And then you come back into another level of, it's just level to level, guys, significant key levels, another level of resistance. Here we're going long again. Long, you come back, look at where you find your support on this previous level. Then you get this pop. This happened actually overnight, which made me a little bit worried. This was going into yesterday. And then yesterday we had continuation to the upside. But actually around the FOMC, we're going to drop down the timeframes now to make things a little bit clearer. Can you see how these levels really come into effect when you're on your smaller timeframes? So you faked it, you deviated, you come up. Look, bearing in mind I drew these levels before we'd even drop down to this time frame. TA absolutely works, guys. For anybody who says it doesn't, they've never used it. They've never studied it. They've never used it, and they've never made money off of it. You can make this is how people make their living, ladies and gentlemen. So you came up, you lost this level, fake your shorts out, up, pop, in you are. Okay? Look at the support that gave, and then where do you find your next level of support? Up here. This key level of significance. This has been a range high. You will get shorters that will take this. It's far, far too obvious for people who are short not to take this. And then, of course, you have yesterday, this was around the FOMC, which is really this chop. And then, of course, the FOMC came out, and we'll go over what Jerome said and why we had the reaction that we did. And And then, of course, since then, he came out. He's a slightly dovish tone. Basically, the dovish tone to it is we're going to do a lot less in terms of interest rates than we need to. So he basically came out and said, we're not going to be as aggressive as we have been. Well, markets are essentially going to price this in. We've shown you your 30-day Fed funds futures and how this is so relevant. And our hourly time frame isn't going to show me anything. We've shown you how relevant this is to markets. And again, Jim Bernanke calls markets liquidity junkies. He's very, very right here. And it is. And you can see the actual fund rate has actually come down slightly. So this, I think yesterday was 95.875 or 25, one of the two, but it was a bit higher. So we've kind of had this priced in for a while. It's dropped a little bit, and you can see the correlation with markets preemptingly, knowing interest rates are coming. Your hedge funds will take money off the table because they know liquidity is going to become scarce. The reason liquidity becomes scarce is because it has to go back into servicing a debt market, which has a high yield on it. We've gone over this 1,000,001 times. You don't get this analysis anywhere else when it comes to crypto, guys. So what are we doing now? What am I envisioning moving forwards? Let's get rid of all these draws. Well, so with our rally thesis, we've said you're going to get probably up to here. We said this is going to be the first level that's really going to test you. Here is as well. And we're currently consolidating, staying above this 30 MA, which I like to use. Most people like 21 or whatever it is. Don't really care. And you're holding it. Now, what I can actually see, potentially, is maybe some sort of a pullback to here. It's going to depend largely on what the dollar does today. Remember, our whole thesis for why you may have a rally during this time period is because we have a weak dollar. So whilst the dollar's weak, it gives the backdrop for the cryptocurrency market to see that continuation to the upside. That's exactly what we've had. Okay? Gold's up today, FTSE's down, Asian market, kind of irrelevant at this point, but it's had a really good week. And the futures are down. But I would say, I like the look of gold in terms of today, and that's setting a pretext. I like the fact the dollar's down. Now, the dollar has been down most mornings, but one trait you'll notice this week is the dollar starts very soft in the morning and ends up very hard in the evening. No pun or joke intended there. It's often the opposite way around, right? Basically, I think potentially what you're looking at playing out, and bar patterns are really, in some ways, irrelevant, to be honest with you. But I kind of feel like something potentially similar to this is going to play out. So you can see you have this kind of high pullback, then you have a marginally higher high, then you set up for that real continuation, or you could say maybe here and then here. So this is kind of what I'm envisioning playing out, okay? Patterns do repeat. You're never going to get it 100% right. But I can kind of see, maybe something like this playing out. Potentially, the alternative is the stock market opens up well today and we just find this as support and we just essentially blast off on a very illiquid market right now. There's not a lot of volume trading back and forth. So this is the game plan for me moving forwards, okay? I think you're going to come to here next. So I think you're looking at 1750. Then we're looking at 18. And then we're looking at these levels up here at 19. And we have even said there's a possibility that you retrace the entire FTX capitulation, which ties us perfectly back round into our broader thesis with our bullish divergence that potentially you are looking at something like this. And this is going to be when something in the financial market breaks. It's going to lead right into our thesis that the stock market has lower to come down, and so on and so forth. So that's took us around about 19 minutes. This is going to be a hell of a lot longer video, but you guys are getting alpha in this video, guys. Absolute alpha that no other channel that is just blowing smoke here, there, and everywhere is giving you. So the Fed Chair Powell says smaller interest rate hikes could start in December. So we're going to fly through this. The Federal Reserve Jerome Powell confirmed Wednesday that smaller interest rate hikes increases are likely ahead and could start in December. So I think they're going to try and get to 5%. So they're currently pricing under 5% at the moment. 75? No, 65. Yeah, 75. Sorry. So they're kind of underpricing it. Bullard's statement was we're going to go between 5 and 7. But this is all dependent on inflation. So we've got the CPI coming out soon. I should have brought that statistic up. But he cautioned that monetary policy is likely to stay relative for some time until real signs of progress emerge on inflation. We will stay the course until the job is done. They have a target rate for inflation of 2%. I personally do not feel like they're going to get down to 2%. Okay, look at what's happened in China. We said this is something to watch. That's probably going to have a factor in persistent inflation. We saw also in his speech, which I streamed for my Patreon yesterday, that essentially, there was signs of definite deflation in certain areas, but there was also signs of persistent inflation in others. So it's a fragile stat that is coming down, in my opinion, rather marginally. We haven't seen a huge decline. We may get that, but I think it will re-emerge at another point. I think we're very much moving into potentially a stagflationary environment where they have restrictive rates and high inflation, which is just bad, up from both ends. And this essentially is going to be very damaging and ultimately cause potentially for something to break or real signs of weakness to show. And this is going to cause them to pivot. At this point, you may have this scenario play out where the pivot sort of drops, where the pivot takes place, the interest rate drop, but the stock market drops with it because of the environment that we're in and the kind of deflation and the kind of trickiness that we're in. Jim Bernanke, I'll fly through this, guys, because we've gone on for 20 minutes now, and then we'll just look at a number of things. So a quick take on Powell. Hope for bad news and you'll get rich. So not quite sure on that, but it's kind of, I tweeted yesterday at the start of Powell's speech, came out with a hawkish tone. We were like, okay, Bitcoin's going up, So he's right here. He did not say anything different than what he said in November's presser. Many are reaching and trying to say he said they would only hike 50. So that's a consensus. That has been priced in for over the month. So nothing new here. He pulls up this chart right here, which I think is we've been expecting this. So if they do a 75, which I don't think they're going to do, but then what happens if the CPI comes out higher? They might. The next thing he goes on to say is what he did imply is moderation. What does this mean? The consensus for next year is a recession. So it looks like it's the highest it's been in 50 years, which is showing here. We're looking at a recession essentially. We need a recession to get Powell to stop. The bear story next year is a decent economy. So if we have a decent economy next year, which I think we'll talk about the unemployment rate in just a second, then he'll continue to be persistent. So we need something to break, is what I think is happening, which is why we want to largely avoid being in markets. And the consensus is for rising unemployment. Some Wall Street shops have unemployment rising to 5%, now at 3.5. Is that correct? 3.7, yes, that is correct. This would be a big move, leaving off the something lockdowns of spring 2020. The bear story is good payroll growth next year. So if we don't have so what he's saying is if we don't have the unemployment go up, remember unemployment in black stock market, correlation here is their inverse, then you're going to, so if unemployment stays very, very low, then it's likely to be more of a bearish outlook for markets because they're going to keep liquidity restricted and vice versa. And actually, I think the longer that we go on in restricted territory with these interest rates where we are with this massive bubble of debt, this is almost an experiment that they're doing right now. We've never had this much debt ever. Then it's a bad outlook. I think markets crumble under their own weight. So it talks about this, and then he says, and everyone has inflation returning to the Fed's target shaded area. In fact, Powell talks about 2%. You're not going to get to, in my opinion, by next year. I don't think you're going to see 2% inflation next year. That's a call I'm making, unless there is a massive demand destructive event like March 2020, which is on the cards, which potentially the yield curve is predicting. We've spoken about all this in great length. So moderation means that recession hits, unemployment rises, and inflation falls. Powell will cut. Yes. The market is a liquidity junkie. Hope good could have a terrible year and lose money. Then the Fed will chop rates and stocks will moon. Well, on to that point. Whenever the Fed has typically cut rates, the markets have actually fallen. And people go, what the hell do you mean? What about liquidity? Well, liquidity, it's a preempt of liquidity. So what essentially happens is, why are they cutting rates? They're cutting rates because something frigging bad's happened. Like, why did they cut rates in 2019 or going into 2019? Was because they nearly imploded the damn repo market. Subsequently, after this, we had a yield curve, and then we had the March 2020 crash. The yield curves predicted every single crash. We haven't had the one from this most recent yield curve, which is why we're trying to keep you guys on the side of it and keep it at the forefront of our minds moving forwards, even though people say you've got a 2-year grace period. Whatever. One thing that I've learned, guys, is all these market veterans are going to get taken on. Okay, absolutely going to get taken on by people like me, the up-and-coming people that are hungry and have something to prove, whereas many of these people that are so-called veterans have got fat off the wealth that they made getting lucky years ago. It's like all these people that invested in the dot-com boom and got very lucky. I gave myself financial freedom from investing in the bear market, the crypto bear market, into the bull market, right? Or a level of it. I'm not totally financially free. And I think to a degree, anyway, we're not going into that topic. But these people have made one good call and spent the rest of their life talking about it. I'm not going to be that guy. I'm going to be continue. This is what I want to do for a living. This is how I'm going to make my name, is by being right on markets and making a lot of damn money off them, and hopefully bringing you guys along for that journey with me. So that is your in-depth cryptocurrency daily market update, ladies and gentlemen. You won't get that sort of content anywhere else with that sort of a fuller picture. If you've liked this video, a like is always appreciated. So is a comment. And hit that subscribe button if you're not already, guys. If you want to check my Patreon, there's a link to it in the description. Thanks a lot for watching, guys. See you in the next YouTube video.